So, welcome everyone to the second session. It is actually a re recording of the session because yesterday the recording was not proper. Okay, there was no sound, so I have to record it again. And so I am taking the entire session again. Anyway, that is not a problem. Let's just see. So, today's main topic will be how to start investing. Okay, and as I said, it's actually easy. It's very easy to start. Okay, it is not a very difficult thing. Well, let's see. The first thing is if if you don't know anything about investing, like if you are a complete beginner, okay, you don't know anything, you can directly start with index funds. Okay, you can blindly put your money in index fund, especially if you're living in India. I cannot say much about other countries, but if you're living in countries like US or India, you can blindly invest in index funds. Okay, why I'm saying that? Okay, okay, before going to invest index funds, let me explain what is an index, which I explained in the last class, but I'll just give a small recap here, okay? So, an index, let's go and see what is an index, okay? So, there are two stock exchanges in India. One is BSE, Bombay Stock Exchange, another one is NSE, okay? National Stock Exchange, okay? Bombay Stock Exchange. So, what an index is like a scale, okay, using which we can measure how much the stock market is grew or fell down in a day or in a given period of time. Okay, so how is it measured? See, suppose we take the example of NSE. NSE, what they did, they took the entire market, divided it into segments, and what they did was out of all the segments they picked the top stocks, okay, like one from retail segment, okay, Dmart, okay, one from petroleum segment, Reliance, one from banking, HDFC Bank, okay. They picked all the top stocks and they made a list of 50 companies, okay. 50 companies they made a list, okay. Now this list of 50 companies, this 50 companies list is their value is taken and that value is assigned a number, suppose 100, okay. Their average value is taken, okay, and their value is assigned a number, suppose 100, okay. So suppose tomorrow market opens and Reliance grows by 2%, okay, HDFC Bank grows by 3%, Dmart falls by 4%, okay. So what will happen? The average will be taken out, average of these, and suppose the average comes out as 1.5% growth, okay. So this number will become 101.5%. Suppose the other day average comes out as 2% of fall, okay. So this will be adjusted to 2% of fall. It will be like somewhere around 99.5%. No, 99.5 the number. Then it will go to 103 someday, and someday to 110 also, okay. So this is how this is calculated, and this is not exact average. It is a little bit complicated thing that I won't be explaining here, but just to give you a picture, this was kind of an average, okay. So this is what is called as an index, okay, this averaging of these numbers, okay, this is called as an index, okay. So there are two major indexes that are used in India, okay. As I said, there are two stock exchanges, one is NSE and BSE, okay. So BSE uses the index that is known as Sensex. Okay, they call it Sensex. Sensex means sensitivity index. Okay, and Sensex is the compilation of 30 companies. Okay, 30 companies compiled together. Similarly, in a similar way, Nifty uses an index called NSE uses an index called Nifty. Nifty means National 50. Okay, it is a compilation of 50 companies. Okay, so this is what they call an index. Okay, so why am I telling you to invest in index fund is if you believe in the growth story of India, as we are a very young nation. Okay, the average age of our nation is 28, and we still have a long way to go. Okay, we're just starting out. If you must have seen in the last few years, India has grown a lot, and we are just starting out. Okay, everyone is saying that this decade India is going to grow massively. Okay, and the growth of a country and the businesses of countries are two very related things. Okay, if the businesses grow, the country will grow, or vice versa. If the country will grow, the businesses will grow. Okay, and the top and being a part of this top 50 companies is definitely going to help you in growing your money. Okay, since if the India is going to grow, most probably the top 50 companies are going to grow. Okay, so if you don't know anything, put your money in index funds, that is mutual funds that invest in the index. Okay, okay, I forgot to say what is an index fund. I said what is an index. Now, what is an index fund? It is mutual funds that invest in index. Okay. Suppose you give 100 rupees for a fund, so they will invest your 10% in Reliance, 9% in HDFC Bank according to the weightage of this stock in the index. Okay. So this is how the index fund works. Okay. So you can always choose to have index fund if you are a beginner. Okay, coming to next slide. Okay, how where to start? Okay, which from which platform to start? First thing I always say is ask yourself whether you are ever going to invest in stocks or not. Okay, why am I saying that? Is if you are not going to invest in stocks, okay, then there is no need to open a Demat account. Okay, there is something called a Demat account. I'll come later what it means to have a Demat account. Okay, but if you're never going to open in stocks, you don't need this Demat account. Okay, you can directly invest in mutual funds. Okay, if you're going to invest in stocks at some point of life, then it is better to start with Demat accounts. Okay, okay. If you're not going to invest in stocks, you don't need to go to any broker. You don't need to use open Demat accounts. If yes, then okay, you should invest through a broker. Okay, so just after some time we'll see what is a Demat account and what is a broker. Okay, Demat account and broker. Let's just go to here. uh, let's see what are the types of mutual funds. Okay, so if you don't know anything, start with index fund. If you know something, okay, suppose you took my classes like this and you came to know what are mutual funds and you knew how to select mutual funds. Now which so you decided to invest in mutual funds. Okay, so let us know the very basics of mutual fund, like what are the types of mutual funds that are available in the market where we can invest. Okay, let's go and see type of mutual funds. Okay, type of mutual funds. Okay, so this type of mutual funds has been classified into three categories. Okay, these are three types. Okay, means one you can classify like this, second you can classify like this, third you can classify like this. Okay, so let us see the first classification, that is equity mutual funds, equity mutual funds, debt mutual fund, and hybrid mutual fund. Okay, equity mutual funds are those which invest in stocks. Okay. Stock and equity are both same things. Okay. Equity means share. You must have heard in Shark Tank that they come and say, I'll give you this much of equity for this much amount of money. And what they're talking about is the shares of the company. That same share means stock also. It is same. Okay. So those mutual fund which invest in stocks like Reliance, like HDFC Bank, those mutual funds when invest in them, they are known as equity mutual funds. Okay. Second type of mutual fund, they invest in debt securities. Okay. What are debt securities? See, one of the ways to raise money in a business is by selling your shares. That you have seen people doing in Shark Tank. In Shark Tank, that you have seen people, startup people, in raising money from venture capitalists and companies coming to stock markets for IPO. Okay. Another way to raise money is by taking debt or loans. Okay. Now there are two ways using which a company can take a loan. First way is it can go to a bank and they'll give me this much amount of money. And bank will always give them a limited money. Okay, they cannot give a huge amount of money because of course, risk. Okay, so the second, but suppose the company has to raise a lot of money. Okay, and it doesn't have the option to go to the stock market anymore. So it what they will do, the company will come and it will issue something called bonds. Okay, bonds, not James Bond, normal bonds. Okay, what the bond will be there? The bond will be nothing but a certificate that will say that this much amount of money will be there with this percentage, with any kind of percentage of sorry, interest rate, and it will be matured after this many years. Okay, that is a bond. So it is up to you how many bonds you can buy. Okay, it will just be a certificate that will have the amount written on it, the rate of interest written on it, and year of maturity. And the more number of bonds you buy, the more money you are going to give. Okay, so this is how they raise money. This it means you are giving a debt to the company. This is one of the ways using which the government raises money. Okay, government also issue bonds like this. Okay, you must have heard like there is this much of debt with this much of with this government. Okay, you must be hearing about fiscal deficit every year. Okay, what are these things? These are nothing but the bonds that government is holding, the debt that government has taken. How the government takes the debt? It issues bonds which are bought by public, like people like you and me. Okay, we can buy these bonds and we can invest in the bonds. Okay, we can invest in the bonds and government will keep on paying us interest. Either it will be yearly or monthly interest, or it will give entire money at the maturity. Okay, so government issues bonds, company issue bond, and those mutual funds which invest in these bonds are known as debt mutual funds. Okay, now what is hybrid mutual fund? Hybrid mutual fund is those mutual funds which invest in equities and as well as in debt. Okay, there will be a certain percentage that they will invest in debt and certain percentage will go to equity. Okay, so uh, so which of these are best, which of the three are best, it is up to you. Okay, you know, there is not a lot of interest in returns in debt. Okay, it will always be at a 4 to 7%. Okay, if you are living at a bad time or recession time, then not recession time, if you're living with at a time when the interest rates are very low, it will go as low as 4, and if the interest rates are high, it will go as high as 7 or max to max 8. Okay, why debts are given so less interest? Because debt are more secure as compared to equities. Okay, what happens in equity, if you put money, after a year the market may go down and you may lose your money if you withdraw them. But in the debt, it is, they are bound to pay you the interest. Okay, so it is a much safer instrument. That is why it returns a little lower. Okay, equities on the other hand, on an average will give you 12 to 15% return. Okay, because you have taken a bigger risk here. Okay, so since hybrid funds are mixture of debt and equity. It will have the security of debt and some growth of equity. So it won't be able to give you more returns than 8 to 10%. Okay. It won't give you more returns than that. Okay. So it is up to you which you want to invest. If you are a risk averse person and you want to grow your money really fast, go to for equity. If you are want to save your money more and you don't want, you are okay with it not growing fast, you go with this. And if you are somewhere in between, you can go with hybrid. Okay. Next classification is direct and regular funds. Okay. Let us see what is this. Okay. Now here is me. Okay. I'm a poor person with hairs like this and I want to invest. Okay. So I saw a fund house. Okay. It was HDFC Mutual Fund, suppose. HDFC Mutual Fund. Now I don't know anything at this point of time. Okay. So I'll do, HDFC Mutual Fund will have an office of its own. Okay. And that office will have a person. Okay. Who will be so-called expert, or the person who will be knowing more about this fund. Okay. I'll go to him. He will explain me the funds, everything. He will tell me which one will be good for my earnings and my risk, and he will suggest me a fund, and I will invest in that fund. Okay, and he will keep on suggesting me whenever to change, whenever if I need to change, or which, or if I need to put more money somewhere, and he will keep on suggesting me. Okay, so what will happen? This person will get a commission because he suggests me. This person will take his own fee. Okay, one fee will be charged by this mutual fund. Okay, that is called as expense ratio. That will be a certain percentage of whatever money you are putting in. Another fee will be charged by this person. I don't know what it is called, but this person will also charge a fee, and that entire thing will come in your expense ratio. Okay, so what it is happening, two places they are charging money, here and here. And this type of mutual fund is called a regular mutual fund. Okay, where people go through a middleman to invest in a mutual fund. Suppose I see classes like this where I am teaching myself. Okay, that, okay, and I came to know a lot about mutual funds. Okay, and now I know which mutual fund I need to invest. I'll index funds. So for index fund, I know I have to invest in index fund. I don't have to go through this middleman. Okay, I'll go to HDFC Mutual Fund website directly and I invest there. Okay, I don't need any middleman. Okay, so what will happen? This middleman's fees will not be charged anymore. My fees for mutual fund, that is known as expense ratio, it will be lower. Okay, because I am not involving any middleman here. So then the mutual fund that I'll buy will be known as the direct mutual fund. Okay, so if you go to a website wherever you there is mutual fund available, you will see the option. One will be growth, one will be direct. Sorry, one will be regular, one will be direct. Okay, so if you're going through a person, it will be a regular mutual fund. If you're directly investing, it will be a direct mutual fund. The choice is up to you. Okay. Third category that will come. Okay, that is growth mutual funds and IDCW mutual funds. Okay, so suppose again me. Okay, this is me, happy face. Okay, so I decide. I come to the mutual fund company, that mutual fund. Suppose I want. Okay, and I want it to grow consistently. Okay, so it is growing consistently. If equity mutual fund, I also want it to grow. It is growing like this over the years. So those mutual funds where I am not withdrawing any money, I want them to grow and I keep the money there. Those mutual funds are known as growth mutual fund. Okay, you'll get the understanding more clearly when I'll say you what is IDCW. Okay, let's see what is IDCW. Suppose I get a little more greedy. Okay, I get a little more greedy and I want a quarterly income. Okay, I said the mutual fund give me my returns quarterly. Okay, every quarter put money in my bank account. So what will happen? Suppose I choose a debt mutual fund. Okay, this debt fund will grow to a certain point. Then they will take out the money and put in my bank account. Then it will again grow. Then they will take out the money and put in my bank account. Then it will again grow and they'll take out money and put in my bank account. Okay. So this money that they're putting in my bank account is known as a dividend. Okay, dividend. And there are mutual funds where you can choose this option also, whether you want a regular income like this or not. It is available in both debt and equity mutual funds. But the growth will not be very fast here because, see, they are taking out money and giving use. So the compounding gets affected. Okay, your growth will not be very fast here. It will go grow very slowly. Okay, and this is known as an IDCW mutual fund. I forgot the full form of IDCW, so let us just see. Income distribution come capital withdrawal. Okay, this income distribution is what they're distributing, and capital withdrawal is when you withdraw the money. Okay, so the growth will not be very fast here. So these are IDCW mutual fund or dividend mutual funds. But since here you are not taking out any money, the growth will be very fast. That is why it is known as a growth fund. Okay, so I generally prefer direct mutual funds because I know about mutual funds, and growth funds. Okay, because I have to grow my money. I don't need a dividend mutual fund because I already have a source of income, so I don't need it. So I go for direct and growth funds. Okay, and I suggest people to go with it because you don't have to pay much fees in a direct mutual fund, and of course in growth mutual funds you'll enjoy the compounding effect. Okay, but then it is up to you whatever you want to choose. Now, let us move ahead. So, we saw what are the types of mutual funds. Okay. Now, we'll see where all we can invest. Okay. Means through what platforms you can invest. Means, of course, if we know mutual funds, we should know also the platforms where you can invest. Okay. So, according to me, means till now I've seen three types of platforms where you can invest. Okay. Three types of platforms. One is brokers. Okay. We'll come to the broker and Demat when I'll explain how to invest in stocks. We'll come to that part. Okay. Just for now, just remember brokers. Through brokers, you can invest, and there are some popular brokers like Zerodha is there, Grow is there. Okay, they give the facility of mutual funds. You can invest through them. I don't know how much fees they charge. Means they charge very their fees. Okay, very less. Even if they charge, I don't know whether they charge it or not. Also, even if they charge, it is very less. You will not be able to feel the difference. It is so less. Okay, and there are platforms like ET Money. Okay, these are not brokers, but through them you can invest. Okay, ET Money. Go to ET Money and see. See, you can go to mutual funds and you can see equity funds. If you have to create an account here, and you see mutual funds here. Okay, you can invest in them by creating your account. Okay, then there are platforms like ET Money, IND Money is also there. You can invest through them. Okay, and there are otherwise. See here, what is happening? You are going to through this you are investing in a ICICI mutual fund, Prudential mutual fund. Okay, so why go through here? You can also directly go to ICICI Prudential website and you can invest your money there. Okay, that is the third category. One was brokers, second was platforms like ET Money, third was directly the AMC websites. Okay, like ICICI Prudential mutual fund. Here. I'll show you there somewhere it will be available. Mm, oh, These websites are actually slow. Huh. Let's go to this one. Okay. Okay, I hope it opens today. Let's just select something else. Buji Fund. I hope it opens today. And I really don't like this. These websites are really slow. That is why I prefer all. I always prefer going to means joining through these platforms because they are faster than these. Okay. So here you see, you can invest in here. Okay, in this fund. So so there are three ways. One, you can invest through the brokers about them. About whom we are going to know just after some time. You can invest through platforms like ET Money. I generally I invest use both currently I'm investing through brokers. Okay, platforms that the brokers provide or platforms like these, they are actually fast. Okay, and at one place you can get everything. Okay, like here you can get mutual funds of every company. Okay, that is why I generally prefer investing through platforms like brokers or these kind of platform. In AMC websites, you will only get what that company shows. Like in ICICI Prudential website, I'll always only get the funds provided by ICICI Prudential. Okay, so I don't generally prefer going to AMC websites. I generally prefer going to them. But again, you have a choice of your own, whichever you want to know, whichever you want to choose. Okay, so that is all about mutual funds, the types of mutual funds. In future classes, we are going to know how to choose a mutual fund. Okay, means how I'll tell you basically how I choose a mutual fund. What are the factors that I see? Okay, and what are the factors you should generally see? Those are the kind of things. But overall, you got an idea of what are the types of mutual funds and how you can start investing in it. Okay, we'll go to now stocks. Okay, and how you can start investing in stocks. Last last session I told you already about how means what are the stocks, what are known as stocks, and how the business happens around stocks. Okay, today I'll tell you how to invest in stocks. And now I'm going to tell you about things that we were waiting for. Broker. The concept of broker comes here. Okay, so there are two stock exchanges that we already talked about, NSE and BSE. Okay, Bombay Stock Exchange and National Stock Exchange. Now, SEBI is the Security Exchange Board of India, who keeps an eye on this all these activities. Okay, it is like the police for stock exchanges. Okay, they create all the rules, they look after everything, and not exactly police. They are the government of stock exchanges. You can say. Okay, they create all the rules. They look after everything. They see if everything is going fair or not. They do everything. Okay, so SEBI has a rule. Okay, you that a poor person like me, not only poor person like me, everyone, okay, everyone who has to invest in stocks that are trading in NSE or BSE or any stock exchanges, they have to go through a broker. Okay, they have to do it through a broker. Okay, you cannot go and directly invest in stocks unless you cannot go and directly invest in stocks that are available in NSE or BSE. Okay, if you want to directly invest in some company, you have to invest in them in startup stage. Okay, while they are raising money from VCs or things like that. Okay, otherwise, if it is available in secondary markets like NSE and BSE, you have to go through a broker. Okay, you cannot invest in them directly. Okay, this is the rule of SEBI. So what is a broker? A broker is an intermediary between a person like me, the intermediary between the public and the stock markets. Okay, the security exchanges. This intermediary which links these a security exchange and a person is known as a broker. Okay, now if you go to a broker, it will open two accounts for you. Okay, one will be a trading account, another will be a Demat account. Okay, Now I'll tell you. Let's see both of them. Okay, trading account, trading account. Okay, what is there when you? This is a broker's website. Okay, so here you're trading stocks. You have to put your money here. Okay, in this account. Okay, and through the money through your account, they will pay the money to the NSE and all, and they will buy the stocks there. Okay, so this account that you are using here, just like the account you are using in Facebook, similarly you will need to have an account with the broker. The account that is there with the broker is known as a trading account. Okay, because this is using this account only, you will have to trade the stocks. Okay, now, when you buy the shares, okay, suppose you don't sell your share in that particular day, in that exact day, you keep your share for 1 2 years, okay. Then, where your shares are stored, where is the information is stored that you own this much share of this company? That information is stored in an account called Demat account, okay. Demat account, okay. Just like you have a bank account here, okay, what happens in your bank account, you store all your money, okay, all the information that you have related to money, like you have this much of money, okay, that is stored in a bank account. Similarly, all your shares or stocks are stored in a demat account, okay. What happens, you, I mean, in the these demat accounts, they store how many stocks you have for which company and with how much money you bought, okay. They store that, okay. Now we know trading accounts, we came to know how it works. We'll see how demat account works, okay. So what used to happen was, earlier, in good old days, okay, in 1970s, suppose in 1970s, 80s, 90s, till 90s, or even the early 2000s, it was happening that whenever you bought a share of some company, okay, you were given a certificate, okay, that was known as share certificate, okay, share certificate. And in this share certificate, what was written? How many shares you own of which company, okay, this will be issued by the company. It will say how many shares you own, it will say with how much money you bought it, okay, and it will also have date and things like that. That will be the information about the shares you own, okay. Now, so this, since this was in a paper form, this was known as material, this was actually in a material form, okay. But then, with the digitization, okay, these things started happening in electronic format, okay, electronic format, okay. So this, so all these shares started getting dematerialized, okay, means there is no more material format, they will be in digital format, okay. So these accounts where shares are stored in a dematerialized form is known as demat account. Demat is short for dematerialization, okay. And who stores these shares, who stores this information, who maintains our demat accounts? There is something called a depository, okay. Depository is another entity. Let me explain. This is me who wants to invest, the guy with this kind of hair, okay. This is me, he's trying to invest. He goes to the broker, okay. So broker gives only the facility of trading, it does not stores your shares, okay. What it does is, they have a tie up with a depository, okay. There are mainly two depository in India, one is CDSL, another is NSDL. They will have a tie up with the depositories, okay. Your information about the shares you own will go and be stored in this one of these depositories, okay. These depositories will have your demat account, okay, and those share information will be stored in one of these depositories, either CDSL or NSDL, because those two are mainly in there in India, okay. So this is what a depository is, this is what a demat account is. So you go, you open a trading account with broker, and that broker opens your demat account with these depositories. Okay, you trade through broker, your shares are stored in the depositories. Okay, but you can see all your share here in the dashboard, broker's dashboard. There is not a problem. Okay, so this is what a broker is, this is what a demat account is. You need a demat account, you need a broker, you need a trading account to invest or trade in stocks. Okay, now where you can invest in stocks, what where you can find the brokers, there is a very good website known as select.phenology.in. Okay, I generally refer many people to these websites. Here you can go and go to this broker section. Okay, it will show you all the popular brokers of India. Okay, again, it is popular, it doesn't have all the brokers of India, it is showing only popular brokers here. Okay, here it will have a summary like this thing, and if you want the full details you can go and check out the full details. Okay, and in the full details they will tell you what services they are giving. Okay, what fees they are charging, what are the pros and cons of them. Okay, and at some and towards the end you will also have reviews by normal public. Okay, people will would have given the reviews. And if you want to know how to open a demat account with those brokers, you can just click here, just click on open demat account and open step by step guide. Okay, so either they will explain you here what are the things required and how to open, or you can just download the PDF and open it and read it and open your demat account. Okay, so this is all the story. Okay, this is how to invest. Okay, I forgot to tell you a very important thing. What are the things needed to invest? Okay, the things needed to invest is you need a bank account, which I suppose everyone is having bank account. You need a ID proof. Okay, ID proof like Aadhaar card or driving license. Okay, and you need a pan card. A pan card is necessary, without pan card it won't happen. So if you still don't have a pan card, I suggest go and make it as soon as possible. Okay, without pan card you cannot invest. You need a bank account, which I suppose everyone has already. Identity proof everyone has, and you need a pan card. Okay, all either you invest in mutual funds or stocks, all three things are required. Okay, all these three things are required. Okay, in stocks only you have to open a mutual fund, you have to open a demat account. In mutual funds you don't need a demat account, but you need these three things to get started. Okay, so this is all, this is all about today's session. If anyone has any question you can ask me now. Let me just get this screen here. Okay, if anyone has any questions you can ask me now. uh the first timers Jyoti and Vidyasagar, you have any doubt or? नहीं मुझे कोई डाउट Okay. मुझे कोई डाउट नहीं है. Okay. Pratibha has some doubt. BSC is top 30 company in NSE. Yeah, not BSC and NSE exactly. The scale that they're using, the index that they're using. Okay. Uh, no, I'll tell you. The index that they're using, like BSC uses Sensex and NSE uses Nifty. So Nifty means National 50, the top 50 companies, and BSC, the Sensex will be top 30 companies. Okay. And yeah, top 30 and top 50. The top 30 are most probably gonna be the same. Okay, because they will find out the categories and they will take out the top company. So most probably they're going to be the same. I have not actually checked it whether they are actually same or not, but most probably they will be same. Only two, three, at max two, three companies will differ. Otherwise, they will be same. Okay. Okay. Any more questions?
Yeah,
Ashirwad, you want to say something? Hello.
yeah. Am I audible?
Yeah, yeah, you're audible.
Uh, Actually, I wanted to ask, like, there are companies who raise IPO.
Okay.
Okay, so like in an initial offering, okay, my friends are like they take it as a lottery or something.
Hmm.
Means they didn't describe it to me properly that what is it about, but I just have a brief idea about it. And what happens if we get any seat in the IPO, like a part of the IPO? What happens after that?
Suppose you invested in IPO. Okay. Actually, what happens now if any IPO gets oversubscribed? Okay, people are subscribing because everyone wants stock. Okay, so everyone will bid for the IPO. Okay. Suppose there are 100 shares only that company has to offer. Okay, and 1,000 people applied for it. Okay, so everyone won't be able to get a share. Only 100 people will get a share. Okay, so it there will be a lottery system using which they will select 100 people and they will send the shares to them. Okay, now those shares will be sent to the accounts of the investors, and on the listing day of the IPO you can buy more shares or you can sell the shares. Okay, so after what happens in an IPO, that those shares are sent to your account. Okay, if you are chosen in the IPO, if it is oversubscribed, then they will choose you through a lottery system. It is if it is properly subscribed, if it means 100 shares and there are 100 people only, then everyone will get it. Okay, and after some days, that the shares of that company will be listed in the stock market. Okay, and on the listing day, then you can sell your IPOs or you can start buying the IPO. I hope this answers your question.
Yes, very clear.
Okay, any more question anyone has? Okay, I guess this is this is that much, and now I'll stop recording and I'll show you about my investments. Okay, of course I cannot. Oh, okay. Maybe we'll get some questions later on. Okay, I'll show you where all I invest money. I cannot show them publicly on YouTube. Okay, so I'll stop the recording here and we'll go ahead.